Yo, yo, yo. I'm gonna start. We're gonna break down gold. This is specifically gonna be for gold, but this applies to all charts. This applies to all charts. All right, cool. See if I'm recording. Yeah, yeah. So this meeting will be recorded. I'm dropping this to the chats. We're gonna explain the fractalness of gold and other charts. You'll see that it's not very difficult to identify market structure, and you'll see that all time frames correlate together. Here, let me mute everybody. Give me a second. So yeah, we're gonna be breaking down gold. Does it automatically mute everybody? Give me a second. All right, we'll just find out later if somebody else joins. All right, so cool. So gold for the month of August, man, super, super crazy. Um, if we pay attention to the daily structure and the 4 hour structure, you'll see that for the month of August, so this is June, no, this is July right here, August. So on a daily time frame for the whole month of August, you can see the date down here, by the way, for those that are not familiar with TradingView too much. The date right here is down here, August 4th, 2023. You can see for the month of August, let me delete everything. Can you mute yourself? Damn, it looks like I do gotta fix it.
I'm listening.
Yeah, but I just need everyone to mute themselves. All right, so starting the month of August, you see on a daily time frame that everything has been downtrending. I called out to the chats 1972 when we hit this thing called an institutional candle right here. 1972. And this area is significant because you see the structure on the 4 hour time frame and you see that it's bearish, right? So, give me a second. I'm trying to edit this. So here at 1972, you can see that this is exactly where the structure breaks, because right here we have this higher high, higher low, high, low, new higher high, a new higher low, a new higher high. Right here we have consolidation in the middle. We have it play out from here on the 4 hour time frame, and then we have the structure break. And this is a structure break because this is a higher high and this is a valid higher low. So when the most recent higher low gets broken, that's a sign that the trend is going to change. So this higher low got broken, This higher low right here got broken. This higher low right here got broken with these two fat candles on a 4-hour time frame. So when I saw the pullback, I pulled out my fib tool. And I waited for it to hit the 702 area to 886 area, and it was in alignment with this candle right here. It was in alignment with this candle. Let me highlight the candle I'm talking about. This one right here on the 4-hour time frame. Some people call it order block. Other people call it institutional candle. I like to refer to it as an institutional candle. It played off of this 702 area in this white box, in this white candle. Now let me delete this tool. So it played off of this when the market came back and pulled back 78% into this zone. Tapped that and then it dumped. It dumped hard. And then you can see right here, if you keep following the 4-hour structure, it keeps doing the same thing. Right here, it plays off of the candle. Right here, it plays off of the candle. Here, let me lock the drawing. So you can use the 4-hour time frame to allow find really good setups so that you're not bashing your head trying to figure out where exactly to enter into the market. Right here, you see the same candle. That's the same thing up here. It just repeats itself. The structure break pulls back into the zone. That's a good sell. Falls more.
It's a lot of fucking money.
Creates hey can you please mute yourself?
Yeah, we have it off that, buddy.
Can you please mute?
Right. Just Charles, go in and out of here. I'm like, what? Oh no.
All right, so you see right here, it dies again. It leaves this candle right here. It pulls back into the zone. Right here is your execution area for a sell. Then it dumps again. It does the same thing like up here. It's the same thing over and over. Dies again, pulls back into the zone on the 4-hour time frame. Keep in mind that we're on the 4-hour time frame. You can pull up your own chart and look at this pattern yourself. And it comes into the zone again, into the 786 area. How do I know it's 786 area? Because I've been doing this for a very long time. This is a 786 area right here. So you see this hair pull into the 786 area. Yeah, a second, let me delete this. You see right here, that's 786, and this line pulls into that 786 zone, into this candle again, just like it does up here. It comes into that candle after it dies, pulls back into the zone, and then it dies for a sell. So I'm just showing you over and over how much opportunities the market actually has, and you don't actually have to wait for somebody to call out a trade. You can just wait for a pattern like this. It dumps, wait for it to create a new low, wait for it to dump, and then when it comes back into the zone, that's your sell. That's your pullback entry. Comes back again right here. It taps the same thing. You see these little hairs? If you would have put a pending order, a sell limit right here, you would have been triggered in for a sell. Right here. Bam. Right there, you got your sell entry. Boom. I called this out to the team today in the morning before 9:30. I literally said, at 9:30, we have a potential entry into here. Now I'm gonna prove it to you guys that this is not a lie. Like this is real stuff. Like the market actually plays out like this. Um, it's crazy. So right here in this zone, I saw this zone right here, right? I saw this zone. Give me a second. I saw this zone right here. This candle right here. That white little box. This white box, that's right there, this white box. It dies, creates a new low right here. And then when I saw this, I said potentially we can have it come back here exactly at 9:30. And what is 9:30? 9:30 is New York Open. 9:30 is when the New York Stock Exchange opens. And exactly at 9:30, before price even got there, price came at 9:30 and wicked into this area, and me and the team got triggered in for a sell. Now I'm going to show you on a 30-minute time frame. You're going to see exactly at 9:30. That's exactly what happened. Remember, when we're looking at time and date, our time and date is at the bottom right here. You can refer to the time down here. So when I point my arrow exactly at this hair right here, that's Wednesday, August 16th, 2023 at 9:30 in the morning. That this wicked into this institutional candle, this white box, this order block or whatever they call it, wicked into there, and then it died for a crazy 1-to-6 risk to reward ratio. We closed the trade at 132 points. Right here in our Telegram. It's a small Telegram. This is a free Telegram. I don't charge people nothing. Right here, right here, I said possible at 9:30 to wick into here. 1905.32. All right, that was at 8:56 in the morning today. All right, hold up. Let me see. It was what was the number again? 1905.32. All right. 1905.32. 1905.32. It's not too difficult. It takes practice, but you can predict the chart. You can. 1905.32 exactly at 9:30. And it was nice. Possible at 9:30 to wick into here. This was the after result. Sheesh, it happened at 9:30. Bam. This was at this was at 1:06 p.m. that I took this screenshot. So it was already in the afternoon when I saw the after result of Goldilocks. So if you would have took this trade with us, this trade would have been, let me see, a risk to reward ratio. Holding it to the equal low. Just holding it to this equal low right here, that's a risk to reward ratio of a 1 to 4. So if you risk 1% of your account, you're getting back 4.7%. If you held it the whole way through, that's 5% right there at 110 pips, 110 points. And yeah, man, the same thing with Goldie at the 4-hour time frame at 1972. Imagine, give me a second. Imagine if we were at 1972 still, and we would have held this trade at 1972. I like when it's a big candle, I like risking half of the candle so that my risk is better. So that's 30-point risk at 1972. Imagine if it would have held this whole thing. Or when we were at a risk to reward of a 1 to 3 at a 3% gain, we collect 80% and then we left 20% riding to do all of this. Damn. That you know what I'm saying? That'll be some nice points right there. It's like imagine all of that. That's a 783-point move off of a 4-hour break of structure theory, a 4-hour break of structure strategy that I'm showing you guys. And the Zoom is gonna be recorded so you can go back and study it. Because if you identify a 4-hour break of structure on a chart and you get a pullback like this, you're gonna be in for a nice surprise because there's a high probability entry for sells, and it's the same thing for buys. It's the same thing for buys. Right here, we have a break of structure on the 1 hour time frame. I'm gonna show you quickly, and then I'm gonna end the Zoom with that. Once again, it's gonna be recorded. So here's a 1 hour break of structure. So right here, we have a lower low, a lower high, low, lower high, lower low. So this is our previous lower high point. Once this lower high point gets disrespected by candle closes, that's the break of structure. So this is a candle close above the lower high point. Candle close above the lower high point right here. Once it breaks this line, which is identifying this lower high point structure, lower low, lower high, low, high, lower low, lower high. So this is a lower high structure to lower low point, right? Or you can identify it like this: lower low, lower high, lower low, right? But once this area gets broken with a candle close, you pull out your fib. And if when you pull out your fib from point A to point B of the range that actually broke the structure, the range that actually disrespected the line, the range that actually disrespected this lower high point, you pull out your fib from point A to point B. And if your institutional, if your price dips from 61.8 to 88.6, if it's in that area, you're clear for a buy. So if it's in this area, I would, let's say, hits this 61.8. If ask yourself, is there an institutional candle in there? There is. It's right there. Little black box, little black candle. So my entry would be right there. Give me a second. I'll delete this. This is for a sell. I'm trying to tell you guys for a buy. Your entry is right here. Stop loss on the other side of that box. I typically like risking 30 points if I'm in an area like that. But having it on the other side right here is good enough. And just holding it to the equal high, that's a 1 to 5. If you risk 1% on that trade, you're making 5% back. And that's for buys. You're waiting for the break of structure. And what do I mean by the break of structure? What I mean by that is, where does the market begin to show you that the downtrend is getting disrespected for buys? So this is a lower high point, lower low, lower high, lower low. Here, let me mark it out with an arrow. So this is a lower low. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, to a new lower low. The moment that your lower high point, your most recent lower high point, gets disrespected by a candle close above, that's your confirmation to pull out your fib tool and look for an institutional candle within the 61.8 and 88.6 zone. So you could have had a pending order. You could have had a pending order right here at 61.8 line exactly. You could have had a pending order at 786 and at 886. Each order risking 30 points. Each order not being bigger than 0.5% of your account balance, or 1% of your account balance. But I like doing 0.5% because if you get clapped 3 times in a week, you're only down 1.5%. If you're risking a full percent, and you get clapped 3 times in a week, you're down 3%. So it's up to you what poison you want to pick. You always got to keep in mind the worst case scenario. You're not always going to find winning trades, but if you trade like this, winning trades happen often. You know, you're not always going to be right. That's why I like finding trades that are a minimum of a 1 to 3 risk to reward. I'm going to show you what a 1 to 3 looks like. Let's say you bought from this institutional candle right here for a buy. Stop loss on the other side. It's 15-point risk. The reason why I picked this area is because it left a black candle like that, made a new high, pulled back into the zone. So this is a good buy entry. Sniper entry, no drawdown. What the fuck is drawdown? You gotta Google it, you know? So right here, that's a 1 to 9. This is a 1 to 3. 1 to 3. So 50 points, risking 15 points would give you a 1 to 3. So every time I call out a trade, I'm going to be calling out trades that are at least a 1 to 3, so that if we lose 3 trades in a row, it only takes a little movement like this to put us back at break even. You get into a buy right here. Let's say you get into a buy right here. Right here in this zone. And then it gives you the 1 to 3. Once it's right here, we collect partials, we collect profits, and that will make you back and put you at break even after losing 3 trades. But yeah, folks, I'm gonna end the Zoom right here. This Zoom meeting will be recorded, and I am gonna upload it on YouTube as well. So I'm gonna catch y'all later. Make sure you don't overtrade, and yeah, hope y'all take it easy and enjoy the rest of your day.